What's up everyone? We're live starting this Robinhood challenge, $0 to $10,000. Well, starting from $3,000 for every subscriber, and we're gonna add $1 for everyone that subscribes to the channel. So let's get right into it. $3,001.12, and that $1.12 is a dividend payment I couldn't control, it just came in. We start this September 4th, and this is really gonna pick up in October. So this first month of September, it's gonna be slow. I'm just gonna be going over some stocks I'm buying here and there, but the pace will really pick up in October, and I'll seriously start buying stocks, like a lot. But for now, I just wanna go over the basics, how I buy a little stock here, buy a little stock there, and I wanna go over my history for the first video, going over why my chart looks like this, the all-time. That's accurate. $4,200 is my profit all time. I've pulled out $1,200 of the profit. I'm gonna put it back as we grow, and I'm gonna keep adding till we hit 10K. But let's set the framework of how to think about this. So everything you invest in your portfolio on Robinhood, on any brokerage, any platform, should be money that's dispensable to you. Money that you don't care if you lose. Like, obviously you don't wanna lose money, but you're okay with living without it, that you'll never need to just pull it out. Never use your emergency savings or all the money to your name. So before you do Robinhood, any type of investing, you need to set up an emergency fund, you need to pay off your debts. When those two things are cleared and you have extra surplus of cash in your life, then you start doing things like this. So starting off with a small amount of money, let me go over this. So in my history, started in 2016 playing around with Robinhood. I've used other brokerages for longer, but Robinhood is where I experimented a lot. And I used to, just try crazy things. I traded penny stocks. I've lost a lot of money. I failed many times, and you can see each failure here, right? We can start with my first failure. It's November 11th, 2016. That's probably one of my worst days. November 18th, that was a horrible time. I was down $1,000 of my own money. That was a punch in the gut. Every one of these low strikes is a punch in the gut. That's a punch in the gut, punch in the gut. And what I learned from this, something that you can learn from me and learn from this, is always expect the worst, but hope for the best. And luckily I've been able to bounce back every time by never giving up, right? So you can see this huge drop, this huge gut punch, but like the next few days, the next few weeks, 18th to the 25th. So what is that? 18th, 25th, we're back up. So less than 7 days later, we're back up, we're profitable, we made up all our losses. And I'm starting to play safe. And then the thing with me, and I think with most people too who start investing, they get bored and they're like, you know what, I'm gonna do something crazy and risky. And then you see this little jump because I took a huge risk. And right after that, boom, another punch to the gut. And I bounced back. I bounced back because I didn't give up. Because every time something bad happens, I just start panicking. I'm like, there's no way I can accept this loss. I'm coming back up. I don't care what it takes, right? But that doesn't work all the time. All of these dips and gut punches, at one point, like if I tried to bounce back and it failed, I would have gone even lower and lower. And this could have been way worse. This chart could have been way worse. Like I would say from November 2017 all the way until September 2018. So almost a full year, this was just struggling. Look at this struggle. Right? This is a big struggle. And then I just made a break for it, and then I decided to stay steady. And here, I just invested in safer companies, blue chip stocks, started holding, started just being safe. And even after a while, maybe, let me read this. We're in 2019 now, maybe a year later, I started getting bored again. And here, I put everything, I remember this gut punch, I put everything in Tesla. And I was like, let's go, Tesla to the moon, right? Elon Musk to the moon. And no, it wasn't to the moon, it was to the Earth's core, it was to hell where it's burning flame fire. And bam, you can see that I lost everything. And then I bounced back. And the way I bounced back is really sketchy. I would do crazy things like add a lot more money to my portfolio using leverage. I used margin, I used Robinhood Gold. I've done it all. Like most of these here were earnings reports. So Facebook had earnings coming out. I knew Facebook earnings were gonna beat, and I would play on the speculation that if Facebook earnings beat, the stock goes up. So I put a bunch of money in Facebook before earnings. It went up and I limit sold at the top. Limit sell means you set an exact price you want it to sell for and it executes at that price. I'll go over that too right now. I'll show you exactly what all that means. But basically, I put a bunch of money in to go back up. Because originally, in my own money, I've had maybe $10,000 or $15,000 of my own money in here at one point to give me that $4,000 profit all time. So part of it is luck for sure, that things went my way when I was desperate and I had that bad gut feeling because I hate losing, but also it's nothing that's sustainable long term. So I want to switch this to a more sustainable platform. I like on my Vanguard account, you'll never see anything like this. My Vanguard account is way more steady, way more safe, right? I'm investing in blue chip companies. I'm investing in the S&P 500. I'm not investing in random penny stocks. Like I'll show you guys, look, I'll show you this cool one, right? Check this out. This penny stock is crazy. If you watch The Wolf of Wall Street, this is Wolf of Wall Street in real life. Like even today, it's probably still crazy. Okay, wow, it's doing nothing this week. This month, 37% gain. Look at that. You see this as a beginning investor. You look at this and you're like, I could just make 37% in a month? Like, it's not even a month. We're August 16th, August 19th. That's probably a weekend jump. In one weekend, you can make 37%. That's a life-changing amount to make in one weekend. Think about those bank accounts with the high interest rates of 2 to 3%. You wait an entire year to get 2 to 3%, but you put it in here and you get 37%, and that's how you can see the greed start to kick in. And that's the problem. Same, look, 3 months, 50%. 1 year, 11%, but look at all these swings. Like, look at these swings. And then the 5 year, look at this. Look at that, look at that, look at that drop. Look what it started at, $29 million a share, down to nothing. Now, it was never 29 million a share. This is what we call reverse splits. So the stock would go down so low in prices that they'd have to split the stock from 1 share to 2 shares. Or is it forward split? I can't think right now, but they split the price of the stock. So for instance, if this keeps going down and it goes down to like a penny, right? They want it to be worth more than a penny. So they'll get 5 stocks and combine it back into 1. So now it's worth 5 cents a share, but 1 share is worth what 5 shares was. So if you had 5 shares before, it becomes 1 share and it's 5 cents now. But it was never, there's never a stock that cost 21 million, except for this one. Let me show you this crazy stock right here. This is Warren Buffett's original, Berkshire A. $307,000, and that's how much it costs to buy that right now. Just 1 share. But if you don't have 307K, which a lot of people don't, you can buy something that follows it, and it's just as similar, but for $204 a share. I'm sure there's a lot more benefits to owning the bigger one. That's if you want to follow Warren Buffett's investing strategy. And maybe I'll make a video breaking down what Warren Buffett's invested in. It's really simple. It's a handful of stocks. Maybe I'll find a picture and just throw it up on here if I remember to. If not, it'll be another video. But let's go over how to buy a stock. So right now, if we go to our accounts, let's go, account summary. We have $3,000 in cash. So we have nothing in stocks, $0 in stocks. So let's buy some stocks. And the first one I want to look at, I hope this wind, let me turn my body this way so the wind doesn't get in the audio. FedEx, I like FedEx. FedEx is a good company. Look at this FedEx, past 3 months, 1%. Past year, they're down 33%. That's a huge drop. 5 years, they're only up 6%. Let's look at their PE ratio, 86. It's still really high. Still really high. But I like that they pay a dividend. I've owned them in the past. You can see right here, I've owned a lot in the old portfolio, and I'm just gonna add it in right now. I'm only gonna buy 1 share just to start with a base. All right, there shouldn't be any wind on this side. So let's buy FedEx, okay? It doesn't matter what the price is. This portfolio is gonna be dividend investing for passive income. So price matters to an extent, but in the long run, this price doesn't matter. So I wanna buy 1 share of FedEx. I just hit trade. Now there's trade options, which we're gonna ignore for now. We'll go over that in a separate video. Let's go over buy. So now I'm gonna become an owner of FedEx right here by hitting 1. Let's review it. Now this is market. I never do this. So hit edit. I go to order types, because market price means whatever the market opens at. If FedEx opens at $300, you have to pay $300. If it opens at 50, you have to pay 50, which is cool, but it depends on what you're doing. If you're doing a market sell or a market buy, you never really want to do those. Don't ever do those. You know the price you want to buy it at, so you put limit. We go to limit here. We see it's at 162.09, so let's put it at 162.09. Market hours, extended hours. I don't care extended hours. Just give me that thing for that price. Good till tomorrow. Nope, let's do it till canceled. Okay, so 162.09 is the only price I'm willing to pay for FedEx. If it opens higher, it's not going to buy it. If it goes down to that price, by December, I'll have 1 share. So we hit review, swipe up, and orders received. We are now an owner of FedEx. Well, when the market opens, because right now the market's not open. And that's how you do it. Another company I want to buy is Abbv, which I feel is undervalued right now. I think they bought out Allergan pretty recently. They're down 27%. This, like, to most people, they see this, they like get scared, like, dang, this is doing horrible. But to me, I get excited. I like to get greedy when others are fearful, right? Like what Warren Buffett says. Same thing here, trade, buy, we own a share. Review, oh shit, I just did a market order. I just did a market order. Let me fix that. I'll fix that right now. Anyway. So here, now I'll show you how to cancel an order. So let's say you did that mistake. You accidentally ordered by market. Let's go to this here. Pending, cancel order. It's that simple. And then we can go back. We can try to buy a share now. Where's the wind's coming from here now? Let's get the wind coming from there. So let's go back, buy a share, order type, limit, 67.85, extended hours. Let's just do it till tomorrow. Review, swipe up. Now we're gonna own a share of Abbv. And this also pays a dividend. So here we can see, all right, it opened at $67. The high was 68, okay? The 52-week high is 96, 52-week low is 60, 52-week lie. 52-week low is 62.66. I can see that it's close to its its yearly low. So that makes me feel like it's cheap. And also their PE ratio is 24, which is not that bad for a biotech company. And here too, you can just see, it's a research-based biopharmaceutical company which is engaged in the development, blah, blah, blah. You can read all this when you open the app. I like how Robinhood shows you all that. So we can see the low, and then volume is just how much of Abbv was been moved around for the day. The last trading day, which is 7.5 million. The average volume is 6.9 million. The market cap is 99 billion, which is just this price of $67 multiplied by the amount of shares outstanding. And the dividend yield, which is what we're looking at, what we want, is at a sweet 4.28%. That's nice. I like that. And if you want to know exactly how much the dividend is, they paid me $5, but that's because I had 5 shares. So it's $1.07 per dividend. And I think it's paid out quarterly. I don't remember how long I was holding Abbv on this account. I think it's paid quarterly. I've messed around a lot. So now we're gonna have one share of Abbv. And the last stock is really basic. Everyone knows this company, Pfizer. Gonna buy one share of this. Order type, limit, 36.50, extended hours, only till tomorrow, review. And we are owners of Abbv, Pfizer, and what's the first one? I already forgot. And FedEx. We can see here, Pfizer pays a 3% dividend, which is nice. And don't ever pay attention to dividend yield. Like, I'm looking at it now, but this percentage always changes based on the price of the stock. What you want to look at is how much dividend the stock pays, and you also want to check something called a dividend aristocrat. Google this. It's going to show you a list of the top companies that have been paying an increasing dividend for the past 25 years. So this shows that through a recession, through bad market times, they're still paying out dividends and they're still increasing it. And those are good companies to look for. There's a lot of other stocks I want to buy, like I'm going to show you Waste Management. I love Waste Management, and I had it on this portfolio, but I sold it to reset it for this video. It's paying 2%. Should I just buy a share? Where did I last sell that one I had? Yeah, I sold it at 119. Yep, I'm gonna buy another share of Waste Management just because I love Waste Management. These are companies I'll never sell. Like Waste Management, we're buying it for this portfolio and we're never gonna sell it. So it doesn't matter what price we buy it at, but I'm still gonna put a limit just in case some freak reason it goes up way too much when market opens. Extended hours, I'll do it till December because I really want one share. All right, and we bought Waste Management. Great company. And now let's buy one basic one that everybody knows about. It's a super boring stock. It's not undervalued, it's not overvalued, it's not a great deal, but I just love Coca-Cola like Warren Buffett does. So I'm just gonna buy a share. And you can see they pay that 3% dividend yield. And we're gonna see over the coming months, the passive income just coming in from this portfolio as we grow to a $10,000 portfolio. And I'm excited for that. I hope you are. And if you've never used Robinhood before, go to the description. There's a link. You'll get a free stock. We'll get a free stock on this public portfolio. So same thing. I'm going to buy one share. Limit, By 55.23, extended hours till December 8th. Oh shoot, one share. All right, let's see how much money we spent today or this week in the market. And the thing about the market is you don't need to worry about waking up in the morning and like being there while the market's open. You can place whatever order you want and just look at it a week later. You don't have to be in it. This isn't day trading, right? We don't have to stress out and be constantly on the markets wondering what the price action is. You just got to set your price that you're willing to buy it at, and then you wait. You just put an offer in like, hey, I'm gonna buy that McDonald's building. Here's my offer, take it or leave it. And that's it. Like, you see how easy it was? You are now a shareholder. If you followed along, if you're using Robinhood and you're buying your own stocks, your own companies, you just became a shareholder that easily. Withdrawable cash, $25.60. So we've spent $440 today. We spent $440, roughly $439 if you want to be technical. Well, actually we had an extra dollar, so $440 on stocks. We went shopping this week. We dropped $440. The least you can do is drop a like for this video if you enjoyed it. Comment below what you want to see, what stocks you want me to look at, and maybe I'll buy some for this public portfolio and you'll feel like you're a part of it too. And you can follow along and buy it on your own. But until then, I appreciate every single one of you. Subscribe with the bell if you haven't already, and I'll catch you in the next video. Peace.